Thought I would go over my portfolio I created a while ago, or transferred my funds from Charles Schwab a while ago to M1 Finance. Thought we also go over a little business with Southern Company, Starbucks, and bond risk today. So stay tuned. Here's my individual account with M1 Finance. I got a little over $6,400 in this account, transferred over to Charles Schwab about a couple weeks ago, as I am transparent with everything that I will show you, as I had done deposits already. $380, along with another deposit of $205, which was this past Friday. And I also have a Roth I transferred over as well. The same thing, deposited $861.18. And along with another deposit of $144.76. M1 Finance has pretty much used every dollar known to man. I had it set for $500 at one time, but didn't think it was a good idea. Just put in the money like I used to with Charles Schwab. My paycheck, whatever percentage I put into the Roth and the individual. I have a percentage that I use that I came up with long time ago. Put in like 63% in an individual account and then 37% in the Roth. And in the Roth, I have all sectored out in sectors. I like it organized in a way that it works for me. Same with the individual account as well. Technology, utilities, energy, materials, telecom, and in the industries. And in this parentheses here is how many stocks are in this technology. But we will go over each individual sector later in other videos. Right now we're going to talk a little about some news here. Southern Company is to buy Bloom Energy, affiliated of Diamond State Generation. Bloom Energy disclosed that Southern Company has agreed to purchase a majority interest in the Diamond State partnership to be applied to purchase Bloom fuel cell energy savers in connection with the upgrade of existing products. And it made a $72 million payment to repurchase the existing energy service earned by the Diamond State. And it's also agreed to buy all equity interests in the project currently held by Credit Suisse. So that's interesting news, and I'm sure it is going to bring up the price of the shares. I own quite a fair shake of Southern Company, so that's always good news. Anything that is related to news of any kind, of any sort, to any company, it's going to affect it. Let's talk about Starbucks now. Starbucks is going higher, is if you have not noticed since last year. Starbucks is also a great dividend and a safety company as well. The stock has increased significantly over the last 12 months, a lot. I remember when I was buying every week when it was at $55. And I got all these reports from Seek Alpha. You can find this information also in NASDAQ, also Morningstar. There's all kinds of news articles you can find of everything. It also goes into depth of the food, beverage sector and how they see that Starbucks will greatly improve over the next many years. And I enjoy the dividends that Starbucks is currently giving us. Starbucks is currently trading at 82, 92. A yield of 1.74%, which is quite a nice standard dividend that they give you each quarter. It also goes into what they do a little bit here. They're a conglomerate of the Starbucks coffee, In-N-Out fast food coffee, and they make good variety stuff. I have Starbucks, but I don't go to Starbucks. I have a Keurig coffee that I drink vanilla cafe latte in the morning, and they are good, just as good as the one at you go Starbucks, but for 89 cents a cup. Can't go wrong. The dividend strength on Starbucks is also improving over the many years, and I see it going up far beyond the stars. And Bill Ackman, I don't know if you heard of him. He is a hedge fund manager who has a big share in stake in Starbucks right now, and is continuing to make that price rise up over the course of many years to come. And here is the dividends that they have paid out, and they have a lot of cash flow. Just goes into depth here. Also, Starbucks raised their dividend this year as well. They raised it by 20%. Where can you go to a job and get a 20% raise in your paycheck? Nowhere. It gives it more reason for other investors to want to buy into the Starbucks stock. At this price right now, if you're a dividend investor, the price does not matter. You're out for the dividend payout. It's what really matters. And Starbucks is also a great company, and they have now competition with another coffee maker in China. And Starbucks is getting worried that they're going to overseek their footprint in China, what has taken Starbucks 20 years, has taken Lycan 18 months to do. Also, the dividend projections seems like it's going to be growing in an outstanding payout ratio of 39% in the next coming years as well. And you can read this stuff on Fool.com as well. It's another place. And last but not least, I talk about bonds, how risky it is just to keep cash in a bucket of a long approach of allocation. I'm just going to read a little bit of article here, what they say. It goes into that even if a long-term asset in the portfolio, mainly stocks, sinks in value, the retirer will have a near-term spending need set aside to asset that won't fluctuate. This helps ensure a stable standard of living for retirement despite market fluctuation. It's always a good idea to have bonds in your portfolio. I do. When you're younger, a good mix of bonds, at least 4 of them, is a good starting point, and around 10%. When you get in your 30s, it should be around 15. In your 40s, around 20. When you're in your 60s, it should count for 45 to 50% of your total portfolio allocation at that time, because you want to keep most of your money, not give it away when the stock market does fluctuate and change. You want it to stay steady as you go. And bonds are also a good safe haven. So when the market is going down, the bonds are not going to move as much. So it does help in that aspects too. And good bonds, ETFs are a good place to start. You don't have to buy individual bonds or anything like that. Just wanted to go over some news with you guys today. I apologize, I haven't been on for a while. I had a lot of health issues in the winter, and then finally getting it better now. I had a lot of throat issues and barely able to talk and coughing quite a lot. So I will be trying to make a video once a week about news and go through my portfolio a little bit here and there. I encourage anybody that when I start showing my portfolio holdings that you do your own research. This is for my risk. Everybody's risk tolerance is different. You might not be a very aggressive trader. I've been trading since I was 18 years old, since 1992. So I've been in this for a very long time. I've also made a lot of mistakes down the road too. But we all learn, and we all are learning together. So thank you very much for spending time with me today. And I hope this information was enlightened to you today. And I will see you in the next video. Take care.